Hello everyone, friends, Mozart here. It's been a while since I recorded any videos, and nothing much has been happening. The price consolidated below all the moving averages, and just on Friday, there was a good breakout. Plus, the week closed, and it seems appropriate to record a new video. It will be short. In general, I have already said the main points in my Telegram channel in advance. Again, if anyone is not subscribed, the link is in the description below this video. I'll just talk about my positions. So I have overall parity here. Nothing changes. Above are these two short limit orders. The first one executed at 63,100, but the second one didn't quite reach 65,200. Both are of standard volume. 200 both are of standard volume. At the bottom, I highlighted in a different color, kind of blue. These are the limit orders for long, which I prioritize more than short. My limit orders for long are double the volume, and for short, they are at standard volume because the market is currently long, and I personally support long positions. I have already explained many times why I take a short, both in videos and on my Telegram channel. I have a large long portfolio in altcoin with a hashtag table. You can also check it out on my Telegram channel. And to avoid any unexpected events, although the price is still moving up well, I hedge my risk specifically with a short. And if we take a very strict approach to risk management, and, to put it bluntly, as it works for me, my entire futures portfolio is currently hedged with a short on Bitcoin, while my entire spot portfolio, the spot positions I have accumulated, are not hedged at all. And considering that if the market is growing, and it is growing now, I break even on futures because the short on Bitcoin offsets the profit from futures. So, I am currently collecting the full profit on the spot positions that we also bought back, and which I also shared in the Telegram channel, the spot positions. Additionally, we don't have a very strong breakout on the indicators yet, despite the significant rebound in Bitcoin. The RSI is only 60, which means there is some momentum, but it's not very strong. A correction could still happen from here. There are still unresolved issues with Iran. And again, not everything is clear there. And plus, September, yes, is a seasonally weak month for all markets and for crypto. So in my case, the short is protected. If I didn't have a long portfolio, I wouldn't be shorting right now, but I would be placing the same limit orders to buy. So that's basically my clear strategy. The stop to cancel the short is set at 68,700, which means it's a trigger stop. Not by touch, but by the daily candle closing above this level. In this case, I close the short at a loss and let the long portfolio, both spot and futures, continue to grow higher, because in this scenario, it is much more likely that everything will continue to go up in the context of the March highs, a return to that level. But for now, since there isn't a strong breakout, I'm protecting myself. Let's see what happens next. Something interesting about Bitcoin. The week for Bitcoin. The same limit orders on altcoin, 4 of them. As I wrote in the Telegram channel, 2 of them might be taken during the correction. I'm mostly counting on the first and the second in a row, and these 2 are quite unlikely, unless World War III starts, most likely. Also, right now we have a good breakout, I repeat, both on the moving averages and above them, and a rebound on the weekly time frame from the lower boundary of the global ascending channel. Overall, the last resistance here remains at around $66,000. It's not as strong as it was at $53,000, but it's still resistance. The main support levels are in the range from $60,000 to $55,000, around here. The most significant support is at the $53,000 to $54,500 mark, right here, and $54,500 right here. So, this is the range of possible fluctuations if the price goes sideways now, or something like this. Although, considering that the deadlines are approaching in October, even if there is a correction, for now, I expect something like this at most, or something like this, and then like this. If there is a correction at all, of course. If there isn't, and we continue to go up, surpassing this extremum, I will take a long on the retest. My position here is clear. Next, altcoin. I wrote a lot about this in the past, so you can open the 4-hour chart. I also shared this block many times on the Telegram channel. $590 to $620 billion according to Total 3, which is the capitalization of all altcoins excluding Bitcoin and Ethereum. We tried to break through $620 billion, but didn't hold, and now the price has returned to the middle of this block. around $600 billion. Although the minimum target has been met, there was a consolidation above the 590 mark. But again, for a large-scale long reversal across all altcoins, for greater confidence, I recommend waiting for a weekly candle to close above the $620 billion mark. This is because there is a significant resistance level here, and this descending red channel is very beautiful. Until we break through it, I wouldn't take too much risk. Plus, Bitcoin is not showing much strength on the indicators yet. That's regarding altcoins. What's happening in the blockchain? So, nothing interesting is happening with liquidations in either direction. There is a significant market slowdown after the major liquidations of both short sellers and long traders, by the way, during the crash on August 5th and everything that followed. Subsequently, the market reached absolute equilibrium in terms of funding rates. That is, it is both shorted and longed here, although the short sellers lost out when the price jumped to around $63,000. They broke through there normally too, although not on large volumes. Massive outflows were coming from the government of Germany, from NTGOX. Inflows have turned into outflows from the exchange. In other words, Bitcoin is once again in shortage on exchanges. Next, interestingly, here is also the profit of short-term holders. Let's start with this chart. Here is their average purchase price. Everyone who bought Bitcoin within 1 month, there is also a total sideways trend. So, this red curve here represents their average purchase. Notice how the price always breaks through it. In a bull market, of course, we are now considering a bull market from the bottom up. It returns to it. Breaking further, it returns to it. Breaking further, it will return to it one way or another. If not now, then later. And now their average purchase price is approximately around $60,000 to $61,000. My first limit order for a long position with double the volume is set there, and it remains there for now. So, at the moment, I am waiting for a correction to that level. If the price does not return here and goes higher, I will simply adjust these long limit orders, but I do not want to enter from the current levels. For the reasons I mentioned at the beginning of this video, if we rewind this indicator back, it basically always works the same way. Looking at the previous cycle, the 2021 cycle, it was the same year. An irregular market, an upward breakout, an upward breakout, retest. Breakout upwards, retest, breakout upwards, retest upwards, retest upwards, went down and retest downwards. That's all. Switch to bearish. Roughly speaking, that's it, and thus we move forward. The same applies to early bull markets. In other words, these are generally good entry points after breaking the average. Entry under the short-term holder. This chart shows the same thing, only in percentages, their profits and losses. That is, on August 5th, they incurred a 13% loss. With the current liquidity, this is a huge, colossal loss for them, and this is a loss on net money. And considering that most of them are leveraged, many have been wiped out from the market. In principle, this is a good reversal point. And considering the fact that the rebound has already occurred from the last increase by 78.6%. Yes. So even if we don't go up right now, it's quite likely that we will form some kind of reversal pattern. Something like a squeeze, although it's too long for a squeeze in the worst case, a double bottom. And with a breakout upwards, that's where we're headed. Here, it is still drawing a global bullish flag in a massive sideways range. Such sideways movements are rarely long. The last time was in 2015, and yet they do happen, and they occur in a bull market, not in the off-season. And the target of this bullish flag, without a doubt, is the height of this flagpole, which from the breakout point will lead the price directly to the $83,000 to $85,000 range. Here is this red block that I drew a long time ago, but we can even expand it. It was 80 to 83. Let's set it to 85, make it wider. And this will be the upper boundary of this global ascending channel, historical, which began back in the years 2020 to 2021. The years 2020 to 2021, well, in the last cycle. That's basically all I wanted to say. So, the situation remains long. I'm holding alts and stablecoins, and we'll manage with them anyway. The main thing is to do what I say. I'm hedging with a short on Bitcoin and recommend hedging your long portfolio with it only if you have a large long portfolio and something to protect. Because the strength in Bitcoin is still insufficient, although it looks much better than last week. Most of my positions are still long. All my short-term limit orders are set to long. All of them. But lower, in case of a deeper correction. This is my current position. Thank you all. This was Mozart. Have a good week. And very soon, in my opinion, we will see a much more significant rebound than we are seeing right now. That is, even if you take some altcoins that have bounced back from the very bottom, they have already done 2x, the most forgotten altcoins. Many of them have made between 60 and 150%, with the heavier ones being closer to 150%. And this is just the beginning of the rebound from my point of view. Currently, the minimum target for many altcoins is to surpass this last extreme point. Then the target will be to return at least to the 50-day moving average, which is the annual moving average. That is, from the bottom, it will not be 60% in this case, but approximately twice as much. And then we can decide whether to reduce or not. For now, we wait. Thanks again to everyone and goodbye.